Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market. So the bulls with significant follow through at this point. The headlines to normal humans have become an absolute joke in the sense that we have seen the same headline pumping the China and US trade deal being close and the market reacting to it a dozen plus times, and it came out yet again this morning and the market reacted yet again. So again, price action is all that matters. The bulls, the big boy bulls that are in control of some powerful tools at their disposal, want markets to go up, and they're good at it. So the market is just fine at this point with a significant recovery. So this is a bullish abandoned baby pattern. I don't really care much about that personally. What I care more about, I have switched to the 4-hour time frame. So I started this morning not liking buying the gap up open bullish, just like I didn't like going bearish on the gap down open yesterday. But for clarity now, for me it is the 4-hour time frame on a lot of names. But I definitely have a bullish lean because the bears are not proving enough to us on this drop that they have follow through. And we'll talk about the sectors. I mean, the healthcare sector and the biotech sector are showing us significant strength. And if we're not seeing fear in all these sectors across the board, then these bears are not going to lose our weekly uptrends. So SPY, 4-hour, I'm taking off extended hours just to keep it condensed and clear. So I'm looking at the all-time high, the low of the dump, a significant bounce, but I am looking for a lower high. I do not expect a V-shaped recovery unless we were to actually get a signed deal to a new all-time high. What I'm looking for is a lower high and a 4-hour equilibrium, because we know, those of us that have been trading long enough, that equilibriums are the most likely pattern after volatility spikes. So I'm watching for a 4-hour lower high to be set, and then we'll be watching for a higher low to be set compared to 307.13. From there, how the 4-hour pattern breaks will give us some direction for the end of the week or perhaps to start next week. So QQQ, it's the exact same setup as to what I'm looking for. 4-hour time frame, take off extended hours for clarity. Looking for a lower high compared to 206.05. And once that's set, we'll look for a higher low. Yesterday, the majority of the bounce was thanks to the tech sector. The financial sector did not participate yesterday morning. It participated a bit in the afternoon. Today, it was the financial sector that was the reason for the market strength. The tech sector was up, yes, but the financial sector went up the majority of the day. So watching for the 4-hour lower high, then we scout the 4-hour higher low compared to 199.20. IWM is still in a daily uptrend. Daily higher low is established at 158.10, but again, same thing on the 4-hour time frame. That's where I see the clarity. I turn off the extended hours to smooth it on out, and we're looking for a lower high compared to 162.93 and then a higher low. Financial sector. So there's your strength today. We opened below the high of yesterday. We did not gap up open, but the bulls certainly saved their momentum for all trading day. We did see some profit taking into the end of the day, but it was just a slow and steady bull move all day today. 4-hour time frame for XLF. Smooth it out. Looking for the lower high compared to 30.26, and then we'll look for the higher low. The healthcare sector is all bulls. We are at the high of 99.99, just under it today. Bulls need to break 100 tomorrow to get follow through. Our new daily higher low is 98.03. So the names that have not lost their daily uptrend are not seeing the 4-hour equilibrium setup. The names that did see significant pullback are seeing the 4-hour equilibrium setup. It's still possible to see it for XLV if we reject from 100 first thing tomorrow, but much higher odds of a bull break than a name like SPY or QQQ, which is still a good bit off from the level we dropped from. Biotech sector just has strength. It just keeps going. We rejected from 94.12 first thing this morning, flushed out some of the weak bulls, some bears jumped on it, and then we set a 5-minute higher low, lower high, little cup and handle follow through, complete recovery, and now we have AUPH with positive trial results, and everybody talking about a buyout now on AUPH. The buyout yesterday was the reason that we held the low of Monday. So merger and acquisition hype and FOMO in the biotech space, keeping it our lead bull sector over the last few weeks. And we are now looking at the next resistance of 96.50 on the weekly time frame. And our new daily high or low is 91.68. Anything above that keeps the daily uptrend intact. The VIX pulling back and looking for a daily high or low compared to 1140. What's the 4-hour for VIX look like? The VIX is trying to set its higher low already. If we pull back in the market tomorrow morning and the VIX goes up, we'll then be looking for the 4-hour lower high and the equilibrium just in the opposite direction. Gold. So gold had a 4-hour bull flag and looked great into the morning, and then the headline came out. And again, these algos and bots are reacting to these headlines still, and they're having a significant impact. So while we as traders roll our eyes and laugh at these headlines, they matter. So we're in 4-hour consolidation now. We're still holding exponential support, but we have to be cautious because we have a daily trend change with no follow through, and we have a market that is still very healthy. Why we have to be cautious? Not necessarily because of gold. If it was just gold looking like this, we'd be a bit cautious, but bulls would still be just fine overall, and I'm referring to bull miners and precious metal bulls as a whole. But look at what silver did today. That's a red flag. We broke resistance straight into a dump, and we only have 1675 and 1663 supports. That would be like if gold today dumped back down into the 1450s. This is the biggest discrepancy between silver and gold that I've seen in recent memory, at least weeks. So completely different setups now. Weekly bear flag is still very much alive for silver. So bulls are cautious in both the metal and miner space. NUGT looking for a daily higher low to form. Anything above 24.94 will do it. So plenty of space to work with. No red flags on this daily consolidation right now. And watching for an hourly trend change back to the bulls to indicate the daily higher low has been set. But not there yet. Oil, massive recovery. Big time day today. Bullish reaction to the inventory report. Hourly time frame needs some healthy consolidation. 4-hour chart will be looking for some healthy higher lows. We're right at key resistance. 58.65, 58.71. High of today is 58.64. So a triple top right now that the bulls are going to try and break to see the highest prices we've seen in months if those levels break. And that's only another point in favor of market bulls to try and keep up their strength after a 2-day pullback that was fairly short-lived at this point. So key resistance tests to be watching on oil. Maybe there's a top fish there tomorrow. To play oil bearish, we'll have to see where we open the trading day. Natural gas pulled back significantly from its bull move, but trying to set a 4-hour higher low. So I'm viewing this as a low, high, higher low. Anything under 2461 is a 4-hour lower high. And if this is as much of a bounce as the bulls can muster, that certainly favors the bears. We're way closer to a bear break than a bull break. Bulls need another leg up to at least 240 to try and form an equilibrium to stay alive, keeping in mind that we do not have a weekly higher low set until we change the daily trend. This bounce was just a daily lower high at this point. So keeping an eye on the 4-hour time frame for clarity, remaining patient, scouting for potential bearish entries. Once we get to a certain point where if we do set this 4-hour lower high and start to pull back, I will then just be patiently waiting for the 4-hour equilibrium to break bearish. Remember the last time, if you've been watching these videos for months, remember the last time we were watching a 4-hour equilibrium that dictated direction for us? It was back here. It was after a dump, a much more significant dump. Bounce was a lower high, higher low, lower high, higher low, lower high, bull break. We had another setup for an equilibrium that was a bull break. This is similar to what we're looking for now. A little bit different on where we're coming from, but dump, big bounce, higher. It was a lower high and then a higher low. So dump, pretty big bounce, but still looking for the lower high. So this is roughly what we're going to be looking for. So hope you have a good day. Do good things. We'll check in tomorrow, and we'll see if we set those 4-hour lower highs.